Most investors are fighting over the same overpriced coastal markets. But the real wealth isn't being made there anymore. It's shifting. While the crowd is chasing 2024 trends, the smartest money is positioning for 2026. We've spent the last 6 months analyzing migration patterns, corporate relocation data, and job growth indices. We aren't guessing. We're tracking the capital. For high net worth portfolios, the goal isn't just growth, it's stability and cash flow. Today, we are revealing the 5 hidden Midwest hubs poised for a massive surge by 2026. I'll show you exactly why these specific cities are undervalued, the data backing the explosion, and how to secure these assets before the institutional buyers drive the prices out of reach. If you want to diversify your portfolio with high-yield passive income without the coastal headache, this is your roadmap. Most investors are playing a losing game. They're chasing the same hot markets everyone talks about: Florida, Texas, Arizona. The problem? You're too late. When the crowd arrives, the cap rates plummet. You're fighting for scraps in bidding wars, paying 20% over asking just to hope for a meager 3% return. That's not investing. That's gambling. For high net worth portfolios, average is a failure. Inflation is eating your margins. Property taxes are spiking in the coastal hubs. If you keep diversifying into the same saturated markets, you're not diversifying, you're just duplicating your risk. You feel it, right? The frustration of seeing great deals that actually cash flow nothing. The real wealth isn't made by following the trend. It's made by predicting where the trend is going before the data becomes public knowledge. By 2026, the migration shift will be obvious. The job growth will be documented in every headline. But by then, the entry price will have doubled. You're either the one who buys the undervalued hub today, or the one who buys the overpriced neighborhood from them in 2 years. The window of opportunity is closing. Most investors chase the hype. They buy where everyone else is already buying. By the time a city is trending on news sites, the margins are gone. To win in 2026, we aren't looking at current prices. We're looking at lead indicators: job growth, corporate relocations, and migration flow. If you want high yield and low volatility, you look at the Midwest. Specifically, these 5 hubs. First, Columbus, Ohio. This isn't just a college town anymore. The Silicon Heartland is real. With Intel investing billions into new chip plants, we're seeing a massive influx of high-earning engineers. This creates a desperate need for high-end rentals and workforce housing. If you can get in now, you're positioning yourself for a massive equity jump by 2026. Second, Indianapolis, Indiana, the logistics capital. As e-commerce evolves, Indy is the primary artery for the eastern U.S. We're seeing a surge in industrial growth that's spilling over into residential demand. Use a tool like DealCheck to run the numbers here. The cash-on-cash return in the suburbs is still beating the national average. Third, Kansas City. It's the ultimate diversifier. You have a mix of tech, agriculture, and healthcare. It's a safe haven market. When the coasts crash, KC stays stable. It's the perfect spot for portfolio diversifiers who want passive income without the sleepless nights. Fourth, Grand Rapids, Michigan. Look at the medical mile. Huge investments in healthcare infrastructure are driving a permanent population increase. The supply is lagging behind the demand. That is the golden ratio for any investor. Finally, Omaha, Nebraska. It's the quiet giant. Low volatility, incredibly stable employment, and a corporate culture that attracts long-term renters. It's not flashy, but the dividends are consistent. Now, you have 2 ways to play this. You can go the traditional route. Find a deal, vet it with PropStream, and manage it. Or, if you have a high net worth portfolio and zero desire to be a landlord, you look at REITs. Platforms like Fundrise allow you to gain exposure to these types of diversified markets without the 2 a.m. phone call about a broken toilet. The window to buy these hubs at undervalued prices is closing. By 2026, these won't be hidden markets anymore. They'll be the standard. Now, identifying these hubs is one thing. Actually landing the deal is where most investors fail. That's why I use PropStream. It lets you pull exact data on motivated sellers in these Midwest markets before they ever hit the MLS. Once I have a lead, I run it through Deal Check. This ensures the cash flow hits my targets. No guessing, just math. If you don't want to manage physical property but still want this 2026 growth, Fundrise is your best bet. It's pure passive income for the diversified investor. The result? A portfolio that scales while you sleep. Check the links in the description to get started with these tools. If you want more data-driven plays for 2026, hit that subscribe button and turn on notifications. Let's build that wealth